Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
And Jim, as always, thank you for having me.
Tim, a couple of interesting quotes in your June newsletter. You said on numerous occasions that once the bubble bursts, it would be a matter of how well it could be contained. And in another statement, you said a number of times that as the bubble expanded, your biggest fear was not just the economic implications of the unwinding of the bubble, but the social and political issues that would accompany it. Well, it seems there's a lot more going on than just concern about financial issues right now.
Yes, and, I've seen that coming for a long, long time. So many answers lie with history. And, I made those comments over and over again because, you never know. As they say, the history rhymes. It's not exactly the same, but it rhymes. And that's what I've seen. I mean, I knew that the economic crisis would bring other things. And, is it directly a result of the economic crisis, or is it just part of the package? I would say it's just part of the package. It's just because nobody's rioting, so to speak, and all this stuff is not a direct, nobody's saying, oh, it's because the stock market was down or because of the economy. It's just, it goes with the territory. And that's what the history was telling me. And quite honestly, I think it only gets worse, because that's what the history tells me. I think before it's over with, we have an outright political crisis over this. What that looks like, I don't know all the moving parts. I know what the history tells me. So I expect, not only the economic side, but the social and political side to get a lot uglier.
Is there still a giant disconnect with what's happening on Wall Street and on Main Street?
Yeah, let's talk about the other quote first. I said, that it would be a matter, once the bubble burst, it'd be a matter of how well they could contain it. And, let me digress from that even. We talked about the bubble and how it was extended and extended and extended and extended. And it was, that's clearly what we saw. I mean, that's what the Fed's actions were. That's why they cut interest rates. That's why they would do step in when there were some liquidity issues and do the non-QE QE. Remember that? That's why that at every critical technical juncture, every time the market would have a little hiccup, we'd see something. I mean, it intervened. So, absolutely, they pushed and pushed and pushed and pushed, and until it broke under the cover of the virus. Well, now, you've stepped in and done the largest QE ever, and the Fed's balance sheet. I can't remember exactly what the statistics were I saw, but it's the largest increase ever, and here we are. But it's fixed nothing. It's created an even larger disconnect than we had at the bubble top, because if you'll remember, we talked going into that top. I talked repeatedly about how the jobs numbers, the jobs growth rate, the CPI, and the manufacturers index, and all the weak economic data, the growth rate on consumer credit, and all those things had been contracting. Some of them have been contracting for years, in spite of what we were being told. So we already had emphatically the weakest economic recovery since the Great Depression. And there's numerous economists that know that. And now we had this shutdown and this alleged partial opening, and talks of of shutting down again. I understand China. I can't take the news on a constant basis, so I don't know exactly what's going on, but I understand China is facing another shutdown, at least in part. And so going back to a normal, if you will, a 2019 normal, or it's just with the economy, it just seems very unlikely. And so we have an even larger disconnect. And so back to my quote, or what you were saying, is that I said how well it could be contained once the bubble bursts. It's a matter of how well it can be contained, and that's exactly what I meant. It's how well this can be contained here. How well can the Fed hold this? How well can they game the market, game the participants, make them think and believe that, everything's okay and that it's going to be okay and that they can hold it and they got this. How long can that go on? Well, I don't know. And neither do they, and neither does anyone else. It's going to go on until we see the structure set up to cap this advance. And then when that happens, as we go through these technical crossroads, if you will, which we're at one now, if structure bites, as it did back at the February top, then, we're going to know based on that structure, hey, okay, we got something working here. And so it's going to continue until we get to that point. And when we do, it's going to be interesting to see. I mean, can they do it again? How well can they contain it again? I don't know. I think that at some point it's going to get to the point where there's going to be nothing left they can do. Are we there? I don't know. But I guess what I'm saying is that they fixed nothing. There is no going back to a normal at this juncture. We have a larger disconnect than ever. This is a counter trend, eye of the storm type rally. How long it's going to last, again, until we get structure. And then I think the deterioration process, once it turns back down, is going to be even worse economically, socially, and politically.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening with bonds?
Well, Jim, this is why, one of the reasons why I'm so concerned is I see a scenario with bonds that, how do I say this so it makes sense? When you see a technical or structural setup starting to take hold, well, you watch it, it evolves, it continues to either take hold in that fashion, or it begins to morph and things can change, and then you go, okay, well, we dodged a bullet, everything's good now. And so, I don't know, but looking at it at this juncture, I see something kind of, scary in the bond market, and I think it points toward maybe later this summer or into the fall, possibly I don't know what it's telling me, but it's not good. I think it's maybe pointing toward a liquidity or some sort of a credit crisis, possibly. And that's something else that we're watching in the letter. The structure will tell us, it will guide us, depending on how it sets up or continues to set up or doesn't. And so I think that plays into the whole thing. And what I'm thinking we're setting up for, we had the initial decline and now we've had this rally. And what I think we're setting up for is a much broader-based economic problem when we turn back down. And again, I emphasize that, it's the structure is going to tell us with that. And it's not just the structure with equities. I think it's understanding what's going on with the yield curve. What it's telling us is what the structure with bonds is telling us, what commodities are telling us. And, all of it is a clue. And I see this as, like I said, kind of the calm before the storm, but we are entering into a technical juncture. Whether it bites, don't know. We're watching. And again, structure will tell us.
Well, we know about history. Bob Hoy, our market historian who we interview every week, said last year, I think it was around this time, he said the yield curve has inverted. Then it went back, and everybody was saying, see, the yield curve has gone back. And he said, doesn't matter. Once it inverts, and even if it comes back, there's still going to be a recession 9 months later. Well, here we are 9 months later.
Yes, and see, back then, and commodities were key. I don't know if you remember from the letter or if you read all of them or whatever, but one of the things I watched with that, he's right, and one of the things I watched with that, when the yield curve inverts, they tried to spin it, as I remember, to say, okay, see, we're seeing the economies, we're good, the economy's growing, and, everything, the yield, with the yield curve, steepening, we're good. Everything's going to be okay. And I was watching commodities, the price behavior and the structure there, saying, no, this is not a reinflation. That was like a pause, if you will. And in terms of some other people's work, it was like a middle portion. And almost to the day, as we work through that middle portion, that pause with that re-steepening, we saw the simultaneous structure set up in the equity market itself, and it cracked. And that's kind of what I'm saying here. That's kind of the same situation we're in here. We have this little pause, and everybody's thinking, okay, everything's okay, we're reopening, and how long this pause goes on is just like that one. Well, I don't know. Again, I don't mean to sound like a broken record. It's going to tell us when we get there. We'll see the structure, and that's what's key, is understanding what it's telling you when it's, as it develops. But yes, I agree with that. And we're in that same situation now, I think.
We'll have more with Tim Cyclesman Wood right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see happening with gold?
Same story. Gold has been the holdout. I've talked about the historical relationships. I've talked about the structure, the 9-year cycle, and it has pushed. It's held up. It's been the holdout. We've had, we saw finally, obviously, equities crack back in February and March. We did not see that with gold. We saw the rest of the commodity complex. We saw crude oil. We talked about crude oil and how it should move lower, and it did. I mean, everything has done pretty much what it was supposed to do, with the exception of gold. And it has been, again, I say it clearly, it's been the holdout. But it doesn't change anything. I still think that rather than this being a long-term sustainable breakout, that it's flirting with that 9-year cycle top. It's trying now to put that structure in place. Does it bite? I don't all the way know yet. It's trying. If it does, if we see that setup solidified, then I think what we're going to see, I talked about the liquidity crisis or the credit crisis or something looming in the bond market perhaps, And what I think we're going to see is just like in 2008, and I don't say this because of 2008. That's not the basis of my analysis. I'm saying this because it's a good, just a parallel, if you will. But in 2008, we saw everything go down. Initially, gold went up, but we saw crude oil peak, and then everything came down together in a broader base liquidation. And I'm saying I think that's the direction we're headed once we get through this little middle portion and we get the structure in place.
Tim, crude oil, is it going to stay where it is, go up, go down?
No, down. I think we go back down. Again, it is in a counter trend rally as well. Now, does it go back down? I mean, it'd be hard pressed for it to go back down. You know, it went negative before, but it'd be hard pressed. And I think on the spot price, maybe $10 or something. Will we revisit those levels? Quite possibly. But I don't think with the slowdown in the economy that I think I see, yes, I think crude oil moves lower with all the other asset classes. Absolutely. Let me add one thing, if I could. If I had someone a couple of people had subscribed that were listeners, and I had a problem getting the email notification. So if someone subscribes and you don't hear from me in a day or so, pick up the phone and call me. The number's on the website. Give me a call. There's something maybe going on with email, but by all means, call me.
Tim, thank you so much for being on the show.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.